You're entering the future-ready CNBC-TV18 EBIX Cash Studio.
Good morning and welcome to Bazaar Morning Call. I am Anuj Singhal, with me Sonia and Surbhi joining in the studio. And what a party we have on Dalal Street. Yesterday, the big talking point was the Bank Nifty hitting all-time high. That was the unfinished business that we spoke about yesterday morning, that perhaps that could be the index to focus on. And just in the dying minutes, we made a fresh all-time high on the Bank Nifty. Not just that, the Nifty is now setting its sight on 18,000 and the Sensex, of course, on 60,000. Just a couple of points. Yesterday, we had the highest ever F&O volumes. Now, you could argue that there's, of course, a lot of participation. The market's at all-time high, but just, want to be a bit cautious. I mean, it never hurts to be a bit cautious, right? FIs, of course, have pumped in 1,600 crores, so that liquidity is well and truly intact, and that's a bit of a parabolic move that you're seeing. In fact, if you look at the SGX Nifty right now, when I was entering studio, it was up 100 points almost. So it looks like we are in for another gap up, and then, of course, we'll take it from there. The big question, of course, is how do you play this melt up, this parabola, if you have not been able to participate so far? If you have not been able to, that's the big question. But Sonia, Surbhi, good morning.
Hi, morning. I mean, it's remarkable, right? The moves that we've seen in the market. And now the Nifty is what? Less than 400 points away from that 18,000 mark. So all set to become a teen over there. But I take your point. I mean, large buying from FIs continues. So yesterday, of course, we saw about 1,600 crores of buying. But put together now, it's been 5,400 crores of buying in the last 5 trading sessions, almost there. So that's the kind of momentum that we've seen. And of course, the big story that we'll continue to focus on today is the operationalization of the bad bank that was approved by the cabinet yesterday. So lots of relief coming through for the PSU banks. 2 lakh crores of stressed loans will be resolved. More on that in a bit, but Anuj, how to approach the markets now? Because, of course, there's this whole theory about how banks will overtake IT in terms of leadership. But in general, what is the overarching theme?
The overarching theme, Sonia, is that, in a bull market, you do not question how much the markets can go up. If you are in it, you just stay in it and, just keep trailing your stops. Same thing you do in bear market. You don't ask question how much lower can it go. And I think that's the first basic principle. And the second basic principle is to let your winners run and cut your losers. Now, in terms of the market, I think it's, as I said, it's a bit of a steroid. This is a parabola, right? I mean, as you can see, classical definition of a parabola. And, in a parabola, the issue is that when the decline happens, that also happens very sharp. But the most money is made on the when you're going towards that peak. Now, you don't know where that peak is. The market that we have right now is the best performing market globally. It's, I'm looking at most of the big markets, and Indian market has done remarkably well. Now, with this move on the Bank Nifty that you've seen yesterday, it's taken out a bit of a bogey of the all-time high. Every time it was getting into a groove, there was underperformance setting in. So there might be some more follow-through rally left in the Bank Nifty. Of course, after an 800-point rally, there can be consolidation. But if you look at the year-to-date stat, the Nifty is up 26%, the Bank Nifty is up 20%, IT is up 48%. So maybe a bit more catch-up is left on the Bank Nifty. But, I just want to point out a couple of, points of caution. People may want to listen to them or ignore them. Brent crude is at $75 beyond that. So that's a bit of a risk for India in terms of the inflation factor. And the market is vulnerable to a bit of a shakeout because remember, this market has gone through shakeouts. It's not that it's been a one-way journey. Periodically, there have been shakeouts. So the only problem that I have is that it's very tough to preempt that, what kind of shakeout will happen, when will it happen. So till then, you still want to listen to what the market's telling you. But in terms of quality of stocks, just want to be a bit cautious. And the other point is the US data overnight was very strong, which means that the possibility of taper is again rising. Now, the issue is we all know that next week is the FOMC meet, and in that taper would be discussed, and perhaps it would start from November. But the market knows that now. So in that sense, it's not going to be an unknown for the market. A taper without tantrum is priced in. So, I mean, to cut a long story short, I think if you're a trader, there's been absolutely no message from the market that you want to be out. But if you are someone who's chasing values, looking for, decent risk to reward, perhaps this is not the market at current levels for you. Surabhi, morning.
Morning, Anuj. Morning, Sonia. Yes, it doesn't matter what the risks are these days, right? You just keep marching ahead, and if you've not participated, if you've been questioning all of it, you end up looking like a bit of a fool. I mean, that's what the market's been doing to anybody who's trying to sort of put rational caution on board. But anyway, that's the sort of market. I just thought I'll quickly, highlight some of the nuances of the bad bank in case you missed all the action last evening. So here's how it's stacking up. It's finally here after, years of started with the AQR and, we had Abhishek put up that whole timeline, all the rounds of restructuring. Anyway, so here's the asset reconstruction company, which is going to be taking over bad assets worth 2 lakh crores. First tranche is 90,000 crores. So the question is, how much money will banks get? Now, here's how that question gets answered. There's a cash component, which is 15%, and the rest of it is going to be in the form of security receipts. A large part of those receipts will be backed by the government, but not all. So the issue is that, okay, what's the value that banks stand to get? I was looking at some of the brokerage notes. So here are the main takeaways. Credit Suisse is saying that the cash recovery translates to 2 to 15% of FY21 PBT. The eventual recovery, including the 85% component, which is security receipts, that will equate to 2 to 7% of net worth and 1 to 5% of market cap, as per their estimates. Jeffries is saying historically, banks have been able to recover 10% from written-off loans, written-off bad assets. They're expecting the bad bank recovery range to be similar, but they're putting a lot of emphasis on sort of team management, on how quickly you can get these things going. They say legacy assets like steel, what we saw even with the IBC was the steel assets got picked up, but the others had more of an issue. So we need to see how this plays along. While we wait for those answers, Anuj, my question on the market angle is very simple. Now, the PSU Bank Index is still about 4.5-5% away from its peak. The Nifty Bank has done that. So do you see a bigger sort of catch-up rally in PSU banks? Could that be a go-to place?
My view on PSU banks is very simple, Surabhi, and I don't know how many of you would have seen the first video that I had put out of my CNBC-TV18 first link, 2004. Canara Bank is still at that level.
Oh God!
2004. State Bank of India, I think is.
Are you serious?
Yeah, I mean, so look, Punjab National Bank might be lower than that level. So all these PSU banks, are great trading opportunities. They've been wealth destroyers, but SBI is perhaps an exception because SBI, and I have a lot of respect for the way SBI. In fact, SBI is better than some of the private banks as well. So SBI is a different case altogether. The PSU Bank Index. The problem with PSU Bank Index is that large part of it is SBI. So you take SBI out, and what is PSU Bank Index? So that's why got to look at SBI differently and got to look at the other PSU banks differently. PSU banks are great trading plays. I don't know how many of people will remember. I think it was 4 or 5 years back when that big bond or capital infusion was announced in the PSU banks.
Oh, there was that big rally.
Next day we had 50-60% rally.
2017 or 18.
Yes, 50-60% rally. One day rally in PSU banks, and next 1 year all these banks spent giving up most of that rally. So and look, there's this issue of culture. There's always you tell me, you'll go to an HDFC bank or an ICICI bank, or you will go to, say, Canara Bank. You will know the difference, right? So, and that's why have the stocks of, Kotak Mahindra Bank, HDFC Bank and all have done so well over the last 2 decades, and why they keep doing well? Because, the opportunity is so large. Incrementally, you keep taking market share away from these banks. We keep talking about aspirational India. So obviously everyone has aspirations of better banking as well, better facilities as well. And that is why, stocks like Kotak Mahindra Bank, ICICI Bank, HDFC Bank keep doing well, because they keep growing. How can HDFC Bank keep growing double digit? You ask, in a country which is, perhaps, saturated, you might say, in terms of, banking, because, there's that large player who's not focusing on his market, and, you keep taking market share away. But these are great trading plays. But, all these PSU banks, when you get to, say, less than half times price to book, you buy them, reasons follow later. And when they approach, say, 1 time price to book, you sell them. Simple. They're not hardcore portfolio bets.
Also, PSU banks, I think, earlier had to compete with the larger private sector banks. Now the entire banking space has to compete with neo banks, right? The fintech companies who are entering and capturing a lot of market share. So making their life perhaps tougher. Nomura actually put out a very interesting note where they said that the key risk in this bad bank issue is the actual recovery rate, which will make valuing these stressed assets very tough, and chances of a material recovery from these assets looks very bleak. So let's see how it shapes up, perhaps.
So So the October 2017, I've been helpfully told, is when that PSU Bank recap had happened. You know, what was the price of Canara Bank at that time? It was 400. On that day, it had hit 400. Yeah, exact 400. 404 to be precise. We are at 167 now. And look at what the market has done in that period, or what some of the other banks have done. I think PNB would be even more. PNB, of course, had this issue of Nirav Modi scam as well. But you get the point, right? I think the only one which has managed to sort of outperform is SBI. But that's for its own reasons.
You trade smart with them, and if you can't trade smart, then perhaps not everybody's cup of tea.
Okay, well, for now, just look at the SGX Nifty indicating a big bumper opening this morning. So the party is not ending anytime soon. But here's what you'll get to see on the equities front. First up, we have Mahesh Nandurkar of Jefferies, who says that the FPI net inflows in equity is only $0.6 billion since March 2021. FPI has invested $3.6 billion in the primary market, largely funded by secondary market selling. He adds that the flows into domestic mutual funds have been strong this year at $9.4 billion, which have helped sustain the market movement. Given even higher equity supply anticipated in the second half versus the first, Mahesh says that FPI flow uptick will be important for the market performance.
All right, let's get you some money market views then. On the rupee, Bhaskar Panda of HDFC Bank says overnight the US dollar was stronger as US retail sales came in much above expectations. Further, the Philadelphia Fed Business Sentiment Index also aided the dollar rally. Oil remained biddish. He adds that in Asia and elsewhere, investors are watching the fallout of China. Evergrande story. India continues to improve, but the Asian contagion will have to be watched out for. Given this background, Bhaskar Panda sees the USD INR pair trading within a band of 73.50 to 73.70 for the day.
Right, and on the bonds, Bhaskar Panda says the Indian benchmark bond yields have been trading in tight ranges, and the pattern is expected to hold today as well. Hence, he expects the 10-year benchmark yield to trade within 6.15 to 6.18% range.
Okay, let's now go across to Nigel for the world view.
Well, the US markets, they ended in the red, a couple of them, but they had a good recovery from the low point of the day, namely the Dow, which was down close to around 400 points at one point of time. That, in fact, did see a good pullback out there. The Nasdaq was relative outperformer because you had a couple of tech-heavy stocks that did do well. The key focus was on a couple of data points. One being the retail sales numbers. Well, that came in a surprising growth of close to around 0.7%. The street was bracing for a decline of close to around 0.8%. So that was a positive reading that we got out there. But in terms of the other data point that we got out there, the weekly jobless claims, well, that came in at around 330,000 odd. So that was a little bit higher than what the street was working with out there. But the markets took note of the retail sales numbers. And that's why the dollar index, well, that's moved to around 93 odd. We'll be waiting to hear from the Fed on September 21st and 22nd odd. A stronger dollar is not good news for gold. So that's why gold, in fact, did see some profit taking overnight. While Brent crude prices have virtually been unmoved, though that's seen a good rally in the last few days, holding above the $75 per barrel mark. No worries in terms of the European markets, though. You had all the three indices that did well in yesterday's trading session. Asian markets, well, as we speak, they've moved into the green, most of them. You had the Kospi that was in the red. That as well has seen a good recovery from the low point of the day. And the SGX Nifty is saying, let's start the Friday party. Well, that's indicating a 90-point bump up. Back to you guys.
Nigel, thanks a lot for that. 17,693 is what you have on the SGX Nifty. And of course, yesterday we had all-time closing high. 17,629 is where the spot closed. And just pull out the Nifty futures as well. 17,611 is where it closed. So good 80-point bump up is what we can expect. Arvind Sanger is joining us, managing partner at Geosphere Capital. Arvind, good morning. Thanks for joining us. Now, normally we start by asking you about your thoughts on the US market, the Fed, and the global market. But really, this morning I have to ask you on this parabolic move that we are seeing in Indian market. It's almost looking like a crypto move, right? Your thoughts on how to approach this market now?
I'm a little bit cautious right now. I mean, I'm obviously a big bull on the economic cycle that is now developing, having legs. But I think some of the moves are a little bit excessive, and I think the market is underestimating some of the inflationary risks that are popping up. And I think those are things to keep an eye on. I don't know if you've been tracking it, but LNG prices in Asia have hit the equivalent of $125, $130 a barrel or more by being in the $122, $23 per MMBTU. And while India is not a major importer of LNG, it is an importer. Coal inventories are at record low levels, and there's coal imports which are costing. Coal prices are at all-time highs, so there's going to be some issues at the power front. The steel prices have been strong, although maybe China is slowing down a little bit. That might help. But I think there are major factors here at play which are worth keeping an eye on in terms of headwinds for global economies. We saw Europe, some industrial facilities shutting down, and so there's some real shortages developing on the energy front, which could impact some of the economic bullishness that we are expecting. I still don't get away from the medium to long-term bullishness, but I'm a little bit cautious here that the market's only paying attention to the good news and not looking at some of the clouds that are on the rise.
Okay, I think pays to be cautious at this point, right? I mean, the Nifty itself has moved 55% in the last 12 months, behaving like a mid-cap. But Arvind, hi, good morning. I wanted your thoughts on how to approach PSU banks, because we've had that announcement about the operationalization of a bad bank that was approved by the cabinet yesterday. But as we were just discussing, PSU banks have been huge wealth destructors in the past. Do you think things will change?
Other than SBI, I wouldn't touch a PSU bank if my life depended on it, to be honest. And I don't see, Anuj was saying this very well. There's really no reason. I mean, they have so many headwinds. You talk about the culture, you talk about the technology challenges from all the fintech startups. I just don't see the point. And so, all of these announcements are, what we call putting lipstick on a pig, so to speak. It doesn't change the fact that the pig is still the pig, and that's what PSU banks are for investors.
Okay. By the way, talking about the global markets in China, the big talk is about this potential default of a property developer and if that causes contagion. But in any case, we'll wait and see how that plays out. Arvind, so till we get any sort of a cool-off or a correction, and that makes it easier, right? Then you have your shopping basket ready, you know what to buy. Till we get to that point, what do you do with a market like India?
Well, I think you take profits where your target price have been hit, where you think that a lot of froth has developed and prices are reflecting all the good news. To me, there are sectors that people have been hiding, like IT, where I think a lot of the good news is already in there. And then there are sectors where I think a cycle is just beginning. A capex cycle is just starting. Real estate cycle is just starting. Some of the metals and mining commodity cycle is still in the early days in terms of being discounted in the stocks. So I like a lot of the old economy stuff. And I think some of those things have legs. So that's the way I'm approaching it. And, as far as the financials are concerned, I'm more interested in some of the emerging disruptors than I'm in the conventional, safe havens. But that doesn't mean that I'm going after the laggard PSUs. Again, I put State Bank in a separate category, but I'd be careful about, conventional financials for the most part.
Okay. Arvind, now let's talk about what's perhaps going to be an important trigger for global markets, the Fed meet next week. And the data has been quite mixed. But do you reckon the taper is on, and do you think the markets will move on regardless?
Well, I mean, I think it's an interesting question whether they specifically announce a date for taper in the September meeting, or they announce that they are definitely going towards a taper, but they will finalize it in the next meeting. I don't know which one. I don't have a strong view. But I think, I think a taper tantrum is off the table because it's been so well telegraphed. So therefore, we're not going to get any negative shocks. Whether it starts, the taper itself starts in November or starts in January is minor news at the margin, in my opinion. I think what's going to matter more is the data in terms of, the Delta variant, how quickly do things get better. We're already seeing, the data getting better in a lot of the states that were the early hit by Delta variant in the U.S. We're seeing that in some of the European countries. So that Delta variant news in terms of economic recovery is important. I think inflation data is important. And I think economic data is important. I think there's a multitude of things, and I think the Fed meet is only a part of the equation, and I don't think there's anything coming out there that is going to cause huge shock either way.
Okay, I have to ask you about some of these pockets that are moving in a trajectory of their own, irrespective of the market. Huge moves in some of the consumer durable names, the Havels, the Voltas of the world. Big moves in specialty chemicals, almost a structural up move over there. And some of these new age tech stocks as well, the Nazara Techs, the Zomatos of the world. Any of these pockets that still interest you from a long-term investor standpoint?
I think, the new age tech stocks are, I'm a little bit cautious on chasing after them. We own one or two of those, but I think we bought ones where we think that there is still some, structural stories. But I don't want to diss any of them because I think there are opportunities, and there are some interesting ones coming public. I mean, Paytm and Policy Bazaar are going to be interesting. So there's a lot of good supply coming of good companies, and there's going to be plenty of choose from. So I don't think I need to overpay for anything. But when you talk about the consumer durables and other areas, yes, I mean, we'd like to own some of the companies that will benefit from the capex cycle, but they're not cheap when I look at the ABBs and the Siemens and some of those companies, or L&T. There's value problems we have, but I think there is room there. But I'm not sure the consumer durables area would go to, or the generic tech stocks, the new flavor, new age tech stocks. But I wouldn't rule them out. I'd just be cautious about picking ones where I feel confident that the story has legs and the companies can grow into and beyond current valuations, which certainly are not cheap by any stretch of the imagination.
Arvind, finally, there's so much going on in the telecom sector here in India, right? And yesterday we had a lot of statements from Sunil Bharti Mittal, and he was talking about how it's time for the industry to come together, calling it obviously a very big landmark moment. And he's reiterating the fact that he sees higher tariffs. So now you tell us, a stock like Bharti, has the immediate rally already played out, or can you still hop onto the bus?
Well, the immediate rally has played out. Unfortunately, we're not there, but I think that the telecom sector clearly has been under so much pressure, and now it's really become a duopoly. And really, Bharti is going to be the biggest winner in a more rational two-player market where the government realizes that they can't, kill the goose. That it's so important for laying the golden eggs for the overall economy and for the tech infrastructure, right? You can't do that without a robust telecom infrastructure and companies that can reinvest in the infrastructure. So I think, yes, it is helpful there, but I would look beyond the telecom leaders to seeing who, if the telecom sector is going to be able to reinvest, is it just the telecom companies, or are there secondary beneficiaries that would benefit? We think there's room here. But we don't have a current involvement, but we're very, very happy to see the government finally take a positive step, because you can't milk the cow dry completely. And I think the government realized that things were going too far in one direction. And that's actually, to me, the most positive thing is the recognition on the part of the government that, this is a sector that needs to be supported, and therefore it benefits the whole tech ecosystem, which can't, prosper without surviving in telecom sector.
Okay, well, we'll leave it at that, Arvind. It was a pleasure chatting with you. Have a great weekend and hope to see you and speak to you soon. Well, that's the word coming in from Arvind Sanger. A bit cautious on the markets now, given the big run-up that we've seen. Let's do one thing. Let's take a quick break. So many stocks to talk about. Our entire research team will be with us. Our list of top 10 stocks lined up in just moments from now. Welcome back to Bazaar Morning Call. Hope you folks are having a good morning so far. The SGX Nifty is indicating that the bulls will definitely have a strong morning. Look at that, 90 points higher. But so many stocks to focus on. So without wasting any time, let me go straight to our entire research team. Anuj, let me begin with you. Large caps is what you're focusing on?
Yeah, large caps, Sonia. And, since it's a FII-driven market, HDFC is the first stock that I'm tracking. It's normally, sees follow through. after the kind of move that you see. So that's the first stock, and its cousin HDFC Bank is the other stock that I'm watching out for. It's the one stock which has, yesterday did not participate in this big bank Nifty breakout, but perhaps today could be its day. I mean, I'll keep an eye on these two stocks.
Okay, so those are the ones that Anuj is going to look out for. Big news coming in on Biocon. They are getting into a tie-up with the Serum Institute. Sonal, morning. Tell us more.
Good morning, Surbhi. Well, yes, Biocon Biologics and a subsidiary of Serum Institute, they are getting into a strategic alliance where now Biocon Biologics will offer approximately 15% of stake in that particular company for a post-money valuation of $4.9 billion to that subsidiary of Serum Institute. Now, do remember that Biocon Biologics was valued at $4.17 billion just in January 2021, and there have been 5 stake sales so far from Jan 2020 to January till now. Valuation has risen from $3 billion to $4.9 billion. Apart from that, additionally, Biocon Biologics will also get access to 100 million doses of vaccines per annum for 15 years from Serum Institute, and they also say that it will generate a committed revenue stream and related margins, and that will commence from second half of FY23. Additionally, Adar Poonawalla will have a board seat in Biocon Biologics Limited. So big updates coming in here. Expect the stock to be in the green today.
Okay, I expect the stock to be in green today, but pull out yesterday's chart of Biocon if we can. Just yesterday, that's of course 1 month chart, but yesterday that's the stock up 5%, but everything was up. So but Biocon was also up yesterday. Let's go across to Abhishek for the feedback that he's picked up on this bad bank issue and how to approach PSU banks. Then after that, Abhishek.
Well, Anuj, to begin with, our government has set up NARCL for bad loans, which will be capitalized with about 30,600 crore for security receipts issued by the company. So, government guarantees on these security receipts will be for 5 years, 15% cash payment and 85% in security receipts. Projects worth about 2 lakh crore will be transferred or provisions moved to NARCL, and they'll also set up Indian Debt Resolution Company. So, Credit Suisse maintains that about 2,400 crore of cash recovery will be about 2 to 15% of FY21 PBT for many banks. Total recovery equates to about 2 to 7% of net worth and about 1 to 5% of market cap for many PSU banks. Antique says that first tranche of transfer will be about 5 to 16% of gross NPA amongst many banks, while Kotak Securities has a different view. They say that the NARCL setup has no near-term impact. The bad banks' best time has probably already passed away, and debt consolidation is the more relevant benefit right now. Back to you.
Okay, so very divided views on the street, and I think we'll have the final verdict in the stock price itself, how the market decides to sort of move with some of these PSUs. Thanks for that, Abhishek. Sonia, some news on Hero Moto that you're tracking?
Absolutely. So the company has gone ahead and announced that they will be hiking their prices of motorcycles and scooters from the 20th of September. Now, this will be a hike of up to 30,000 rupees across the board because of higher raw material prices. Now, just to put into perspective what's happening here, at a time when the electric vehicle makers like Ather Energy are slashing prices by about 25,000 rupees because of subsidies coming through, here is Hero MotoCorp hiking prices of IC engine vehicles. So would be interesting to see what happens with demand, because demand in any case is moving towards the electric vehicle makers. So I'm going with green today because it'll be marginal relief, but important to see what happens, because the stock in any case has been a huge underperformer because of the big move in EV sales.
Oh, yes, absolutely. Hero has been one stock that's kind of been sitting out of this rally. So let's see how that plays out. But for now, we're getting back to Abhishek. Abhishek, you're also tracking Ujjivan Bank. Of course, Poonawalla Finance, we know what all is happening with the board, but that stock also on the radar. Couple of others. Run us through the rest of your list.
Well, to begin with, Surbhi, Ujjivan Small Finance Bank, RBI has approved constitution of Special Committee of Directors to oversee the operations with effective from 16 September. So, Special Committee of Directors will have 3 independent directors, and they will oversee the admin and operations in absence of the MD and CEO. Kotak Mahindra Bank is another one on radar. They have announced that they will acquire the vehicle financing portfolio of Volkswagen Finance. With this acquisition, they'll gain about 30,000 customers and total portfolio of about 1,340 crore, which forms about 0.62% of their total loans. They'll also acquire the NPAs of Volkswagen Finance. Poonawalla FinCorp, MD Abhay Bhutra has resigned with effective from September 16. Bhutra now ceases to be director and key managerial personnel of the company. In an exclusive reply to CNBC-TV18, he has pleaded innocence and he has said that he will come out clean and has not shared any UPSI with anyone and is ready to provide all the required clarification to the authorities. Back to you.
All right, thanks a lot for that. I'm also watching the aviation stocks because the data continues to pick up as the COVID restrictions ease. In the month of August itself, the DGCA has put out that the Indian air traffic has gone up 34% month on month at 67 lakh passengers. Now, it is still much less than the 78 lakh passengers that flew in the month of March. So, we're not back to those levels just yet, but definitely it's an improvement month on month. Also, what is important is the passenger load factors have gone up both for SpiceJet and Indigo. As you can see, SpiceJet almost at 80% now and Indigo back at 74%. Indigo's market share continues to be, at the market leadership level at about 57%. And more importantly, I'm going with green for these stocks because currently the airlines are allowed to operate at only 72.5% of their pre-COVID capacity. Once they are allowed to operate more, then of course the passenger traffic will go up further.
Oh yes, and with the way people are traveling all over, it's a little surprise that those numbers are looking better and better. Nupur, good morning. What are the stocks on your radar today?
Good morning, Surbir. Let me start with Cosmo Films as company to set up new production line for BOF Films at Aurangabad. This line will require an investment of about 350 crore and will be funded via internal accruals as well as debt. So keep an eye on that stock. Balkrishna Industries as company started the trial production at its greenfield project at Aurangabad, having an installed capacity of 30,000 metric ton per annum. So incremental production expected to result in better revenues. So positive news coming in there. And lastly, TVS Motors, as company forays into European e-bike market, announces acquisition of majority stake in Swiss company Ego Movement in all in cash transaction. So positive news coming in there as well. Back to you.
Okay, Nupur, thanks for that. Let's go close to Agam then for some more stocks in news. Agam?
Right, I start off with Infosys because it will move into a strategic partnership with Frost Bank over a mortgage loan product. Moving on, we have Intellect Design Arena as well, which has bagged a multi-year digital transformation deal with Reserves Bank. And finally, we have Inox Wind, where Mint reports that the company is looking to sell either controlling or minority stake in its operations and maintenance division. And they're valuing this specific business at around 3,500 to 4,500 crores. But do remember that CNBC-TV18 has not independently verified this report.
Okay, Agam, thanks a lot for that. Well, those are all the stocks in focus today. But let's do one thing. Crude has been rising. So what is the impact that would have on our own markets? Manisha Gupta is joining in, our commodities editor, to give us a quick roundup of all that's been transpiring there. Manisha, hi, good morning.
Morning, and thank you for that, Sonia. Well, yes, we have seen the crude oil prices trading steady at the 2-month highs. The U.S. Gulf facilities are still recovering from the IDA impact, and the demand recovery has been quite strong after the last year pandemic-related drop. And the gas prices have been surging as well, 115% up in U.S., 240% up in Europe in this year. So that has been supportive too. And then the agencies believe that we will be back at 100 million barrels per day of global demand in next year. So all factors supportive for crude and is the reason $73, $76 coming back in case of both the varieties.
All right, we got that. Manisha, thank you very much for the updates there. Crude continues to be a concern. We'll take a break on that note. On the other side, all the fundamentals, lots of stocks to discuss with Gurmeet Chadha of Complete Circle Consultants. And in a bit, we'll also chat with Venkatraman Narayanan, MD and CFO, and Joseph Anantaraju, the Executive Vice Chairman and CEO of Product Engineering Services at Happiest Minds Technology. That's one stock that's been on a tear along with most of mid-cap IT. We get a sense on the business.
Welcome back. Gurmeet Chadha is joining us, the co-founder and CEO of Complete Circle Consultants. Gurmeet, good morning. Thanks a lot for joining us. The market's, of course, been on steroids. The first question on PSU banks, how would you approach them, especially, say, big names like SBI?
Good morning, Anuj. I think the bad bank news finally is welcome. I think it's a good step to resolve these legacy issues. But we need to be careful in terms of differentiating between trading and long-term opportunities. SBI, I continue to like Anuj. Obviously, the bad bank news is a trigger. If you see last 4 years, and that's why I'm saying we need to concentrate more on what is structurally changing. The NPAs, gross NPAs are down about 43% from almost 2.2 trillion to about 1.2. If you see their restructured book, that's at about less than 1%, which they guided for. The SMA1, SMA2 book also is at about 0.6%, which gives you some comfort on, asset quality going ahead. The PCR stands at about, 68%. In fact, on corporate book, the provisioning is as high as about 87%. So I think it's actually done well on slippages and credit costs with even some of the private banks. And I'm very, very gung-ho on these subsidiaries, with once SBI mutual fund also lists in the next 12, 18 months, possibly, maybe 200, 250 per share you can assign to various subsidiaries, with 3 subsidiaries, market cap being excess of 1 lakh crore. So looks at 1.1, 1.2 book value, looks still pretty reasonable. And mind you, before this NPA thing settled, SBI had a 10-year ROE of about 15%.
Okay, got that. So, that is on some of these PSU stocks. I also wanted to ask you, Gurmeet, about the entire consumer durable space, because there's been a mammoth rally there, whether you take, Havels, or Voltas, or Crompton Consumer, all sitting at fresh highs. And of course, as we've seen, demand in general has picked up. Is there any stock that you still like from both a growth as well as valuation perspective?
So not too much comfort on valuation at these multiples. Polycap, we did discuss some time back, and even that has gone up. That probably remains a little more reasonable, if I were to call. These days 30, 35 multiples are called reasonable. Such are the times we are in. But any correction, any dips in the names you mentioned, Voltas and Polycab in particular, could be an opportunity. I think you need to play the waiting game now. Be very selective in terms of what you incrementally want to allocate capital to. Whenever you have added money at very high multiples, the near-term returns have been slightly disappointing.
Okay. Gurmeet, good morning. Banks are always in the limelight. We've discussed the PSUs. I want to ask you about IndusInd Bank. Now, we know it doesn't get the blue-blooded pedigree valuations like its larger peers. But there's a lot of excitement now, considering telecom resolution seems to be on the horizon. So would it make the cut for you?
So I would still stick with the ICICI and the HDFC of the world amongst the larger names. I think ICICI in particular, we are seeing a very silent and granular transformation. The retail book is now almost 70%. The asset quality metrics are absolutely top-notch. They are showing growth in NII, NIMs, the CASA ratios amongst the best in the category. And the initiatives they are taking on the digital front are quite exciting. I've been personally ranking with them, and also on the business banking firm, their digital offering are probably the best in the industry. So still at about, as I said, 2.5, 3 book value. We stick with them. If you want to do a bit of value hunting, maybe Federal Bank, maybe IDFC First, provided they are able to solve the their GNPAs are still at probably 4.6, 4.7%. Trades at about 1.5 book value. Any resolution in telecom. What I'm impressed right now is the way the CASA is above 50%, and the way the NIMs and fee income is stacking up. So any improvement in asset quality, and that's one bank which can get rated. And there's this renewed activism by a lot of shareholders in the holding company, which could see some changes maybe going forward.
Okay, well, stay on, because, one space that has been doing extremely well is this entire technology space. And one of the stocks that we're looking at is Happiest Minds Tech. It has been 1 year to that listing. So if you were an IPO investor, you would have clocked in returns of 800 times on the stock. The current market price is around 1,500, not 1,500 crores is 1,500 rupees, and the issue price was 166. So the return for IPO investors is what, 800 times. Phenomenal. We have Venkatraman Narayanan, the MD and the CFO, and Joseph Anantaraju, the Executive Vice Chairman and CEO of Product Engineering Services at Happiest Minds, who joins us now. Gentlemen, morning to both of you. Mr. Narayanan, I want to start by asking you about what the way forward could look like, because earlier you had guided for a 20% organic revenue growth over the medium term. But in the near term, how do you see things? Has demand picked up in a big way, or do you think things have plateaued?
The demand scenario has only gotten better from where we were at the end of the first quarter when we met last time. And things are looking very good from the customer addition or growth of existing customers as well. So demand is good. And I'm sure it will lead to also the supply situation. Supply situation is also not as good, but we are managing to hold on with employee net additions of about 300 in the first quarter. And as I've been mentioning, we are trying to keep up to the same or similar numbers. I would be happy if we did similar numbers for the next 3 to 4 quarters, given the demand scenario.
Okay. Yeah, supply side challenges, manpower challenges, which means big salaries, right, and high attrition. We'll get to that in a bit. But Joseph, thanks for joining in. By the way, congratulations to you guys on a great year on the street. So can you give us some more qualitative inputs on demand as well? So far in the second quarter, I mean, what are the kind of inquiries you've seen from clients? What's happening with deals, deal sizes? More qualitative inputs on what the future of this demand looks like over the next few months. Joseph, you're on mute, I think.
Sorry, I was on mute.
Yeah.
So if you look at it from I'll probably take 2-3 angles. If you look at it from a vertical perspective, most verticals that we are operating in seem to be showing strong demand growth, with customers initiating or implementing digital transformation initiatives. A few of them may be a little bit ahead or having more spend, like edutech, which continues to be strong for us. High tech, retail, we are seeing a good spend, with the whole e-commerce move. And again, in the media space, the move to digital media, we're seeing quite a bit of initiatives out there. In terms of technologies, one area, artificial intelligence, I would say cloud is almost a done deal now, right? Most of our customers are operating on the cloud, and a lot of work happening around leveraging artificial intelligence, analytics, to get more predictive, to improve your recommendation and things like that. One thing we've noticed in the last few months is customers looking at more of automation. I think there are 2-3 things out here. One is just the whole remote working, leading to more automation, and equally important is the supply side challenges. Customers are looking, how do we get to use technology more? And so we're seeing strong uptick on automation as well from a technology angle. Geo-wise, all geos continue to do well. I think in each and every geo that we operate in, customers are looking to adopt digital technology. So I wouldn't really call out any specific geo. The demand is strong across geos.
Mr. Narayanan, I want to come back to that point you made about how demand is good, but there are still some supply side issues. And in that context, do you think the supply side pressure has gotten worse because your subcontracting costs have risen? Your attrition is now almost at 15%. It jumped up in Q1. A, have the supply side issues worsened? And B, is this peak attrition, or do you think it could get worse?
If I were to take a stab and make a prediction, I think things are going to get a little bit worse and then start improving, because you see there is always a slow build-up when it comes to attrition, and the pipeline then slowly builds up on people moving out, looking for the newer opportunities that are on offer, while we keep adding and backfilling the open positions. So both of this is happening on the at the same time. So it's likely to get worse. I would say from our numbers of 15% last quarter, it's likely to increase, and then we'll be able to stabilize it over a period of time. Because right now there is so much of demand. People are hiring for digital talent. They're looking for places from where they can ramp up very quickly. So sometimes there are there are decisions which are not very logical that are taken essentially on the compensation front or on what's on offer. But, you know, the IT industry is kind of matured, the services industry especially, and we are built to make sure that we address this on a measured and a time-based basis.
So, you know, I'm just trying to understand what that translates into in terms of immediate margin pressure. At the end of the first quarter, your EBITDA margin was at around 23.3, which was almost a 200 basis points decline over the previous quarter, quarter on quarter. So will this reality mean more pressure, at least in the interim, or will...
If you adjust for that, we are at about the same 25.6, 26% number that we have been doing for the last 4 quarters. That said, I've always been cautious in guiding on the margin front. I've been saying that sustainable margins should be in the range of about 22 to 24%, because we don't want to say no to business. We don't want to say we want to retain people. There are certain immediate costs that would have to be taken. So we had done a compensation change in January, Q4 of last year, which was effective Q1 of this year. And, you know, replacements are also being done at market prices. So compensation has a way of catching up to the demand. At the same time, you try to match up with the various levers that you have. So utilization is a lever. Pricing is the rates that we get from our customers is another lever. Third is the geography mix. So if you look at it, we have always been, we have got to leaning towards US as a geography of focus for us. And that geography is the first and the best to adapt to digital requirements. And so to that extent, they are also open to increasing rates and prices because they are also aware of this. Thanks to all of the press and all of the attention that's being given to the supply side challenges, customers are also now open because they also know that if you need new talent and delivery to be done on a time-bound manner, you need to make certain investments. So they are also open to talking about rates. And right now, many of the new deals are not starting basis rates. It's basis, how can you achieve the solution? How can we bring in the efficiency? How can we talk about bringing down the costs on a recurring basis? These are the things that people are talking about and not immediately rates. So that's a huge change that you're seeing on the demand side. And on the supply side, yes, I would like to believe that this is temporary and we would like to hold on and continue to backfill, make adjustments as required to meet the market necessities and the market realities and go forward.
Okay, we will leave it at that, gentlemen. Thanks a lot for joining us. So that's Happiest Mind, given you an 8 times return since its issue price. Been a big mover there. Let's do one thing. Let's take a quick commercial break on that note. But up next, on the other side of the break, our technical experts will be joining us. Mitesh Thakkar and Srikanth Chauhan will give us some trades for the day, all set for record highs today.
Chauhan now join us to discuss how to approach this market. Good morning, Mitesh.
We'll just come to you in a bit, Anuj. Actually, I think Mitesh and Srikanth are joining us to give us some views on the technicals of the market. Mitesh, hi, good morning. I guess, you know, everyone's question is that once again there's going to be record highs in the market. So what is the way forward? What are the levels to look at?
Good morning, Sonia. I think we've been maintaining longs ever since we broke out about that 17,430 levels, and I was looking at 17,640 as the initial target. But then, you know, we've seen this before, and it happens typically in a bull market in a strong uptrend that higher highs are being made. So just trail the stop losses. We can keep extending the targets, and the next one would be close to about 17,750 or even 17,900. But then, you know, it's difficult to figure out a pinpoint number over here. So the idea should be to trail your stop losses and trade on the long side. The Bank Nifty could be interesting. Yesterday was a fresh breakout with the Bank Nifty recording its highest ever closing. And a lot of PSU banks, State Bank of India, the Canara banks, Punjab National Bank, etc., are showing good traction, along with some private sector banks which have made fresh highs like IndusInd Bank, etc.
Okay, Mitesh, good morning. So you mentioned Bank Nifty in passing, but after an 800-point rally, how do you approach it? What's the fresh entry point? What's the stop loss? Do you think the catch-up perhaps could have some more legs?
So my belief is that, Anuj, there should be definitely some catch-up happening on the underperformance of the Bank Nifty. And the minimum target, if you look at the intraday setup and the breakout about this 37,300, 320 mark, gives you zones of around 38,200, 400 as the possible area. But if you look at the slightly medium-term charts, good chance that 40,000 could be a logical target over here. So I would be very positive on Bank Nifty, and that in turn, of course, will keep the Nifty in good health.
Okay, fair enough. Shrikant, good morning. What's your index rate?
Good morning, Anuj. See, like a lot of index heavyweights are still participating in the market. They are finding support at lower levels. Reliance Industries, HDFC Limited, Bharti, as well as if we go through with a few bank stocks like ICICI Bank, State Bank, even ITC. So the way there is like a support from all these heavyweights to the market, I'm of the view that the markets are certainly moving towards the levels of 17,000, maybe 800, 70,000, 850 sort of levels, and any dip from current levels will be an opportunity to create some long position. After almost a period of 6 months, the Bank Nifty has broken its previous high. That means there is like a further more momentum that we can expect in the near term. So ideal strategy should be to look for adding long position if there is any correction during the day, close to let's say 17,540, 550 sort of levels. On every minor dip, we should look for adding long position, and we can expect 17.8 on the high side.
Let's discuss stocks then. Mitesh, you have a lot of financials on your list, and you have a sell as well.
After a few days, I think, attempting one short call, because a lot of steel stocks are looking, to get into some kind of underperformance, and on the charts also looking could give a pullback rally, a pullback decline. So JSW Steel is a sell with a stop at 683 is a sell below 683 with a stop at 692 for targets of 660. And on the other side, have a buy on Canara Bank. Keep a stop below 163, 175, 178 should be the first target area. Shriram Transport Finance is a sell with a stop at 13. Is a buy with a stop at 1389 for targets of 1440, and Apollo Hospital is a buy as well. Keep a stop below 4820 for targets of around 5,000.
Okay, all right. So thanks a lot for that. Well, let's do one thing. Let us go across to Shrikant as well to get his views. Shrikant, what are the stocks that you will be looking at today?
Yeah, certainly all these stocks are well and in light. Canara Bank, it is like closing above its monthly levels, and the next level to watch out for would be 175. But in the near term, we are expecting 190, 200 sort of levels possible to achieve for the Canara Bank. So it's a buy at current levels. We also like Bajaj Finance. The stock has corrected to its important support areas in last 7 days, and it is now reversing from its important support areas of 7,300, 7,350. So from here we can see the levels of 7,650 or 7,700. That's the view. We should look for adding Bajaj Finance at current levels with the stop loss at 7,350. And the last one which we like is Reliance Industries, and the reason is because 2,370 is acting as very good support for it. And if we see its broader formation, then I think after crossing its all-time highest levels after a almost period of 12 months, I think stock is moving towards the levels of 2,600. So at least 2,500, 2,540 is possible in next 1 or 2 days of time. Buy at current levels, Reliance Industries with a stop loss at 23.80.
Okay, well, on that note, let's take a very quick break. We will come back. We'll have the pre-opening rates. We'll, of course, look at how PSU banks are going to open up after the bad bank announcement. And we'll discuss that. Kunal Shah, the BFSI analyst at ICICI Securities, is going to join in. Let's get his sense on some of these stocks. And then Shirish Pardeshi, the FMCG analyst at Centrum, joins in. We'll talk about the FMCG outlook ahead of the festive season.